All down. All silent. Going. Gone. So congratulations.
Welcome to the Current Market Insights podcast, brought to you by Harris Partners Real Estate. Each episode, we chat with real estate author and industry leader Peter O'Malley to discuss the current property market conditions and provide insights to assist you on your property journey.
Welcome to Current Market Insights. Peter O'Malley, as always, pleasure to have you with me in the studio.
Good to see you, Ciaran.
Peter, really important changes in property this year, I think. All across the country, there's things happening, but in New South Wales in particular, we've had a pretty substantial change in the first home buyer market. It was talked about in 2022. It's been talked about for a long time prior to that. Tell me, what are the changes in the first home buyer market? What is the government scheme? I guess what are the really key and salient points for people who are in this space?
Well, the New South Wales Liberal government have introduced an alternative option for first home buyers, Ciaran, where they can forego paying stamp duty in favour of an annual property tax of $400 plus 0.3% of the land value each year. That over a longer period of time will mean they pay more stamp duty if they own the property for quite some time, but I think the theory there is that buying your first property is a stepping stone to upgrading through the market, and that over time they're much better getting into the property market now by avoiding the stamp duty, paying the little bit of annual property tax each year, but they are on the property ladder. Most importantly is they're creating stimulation and activity at the bottom end of the market, which is badly needed at the moment.
So you say that they'll pay an annual property tax amount plus, a set amount plus a small percentage for then the lifetime of ownership.
Yep.
How long, and let's just use very broad averages here, how long would they have to own the home before they get into a position where they're now paying more stamp duty than they may have paid up front?
Look, that's a variable, and that's something that first home buyers might not like about this, is they're saying 0.3% of the property's land value, but land value goes up each year, as we know. Now, if you're an apartment, the land value aspect of that property is much lower than if you buy a house and land package. So there are some elements of this where the first home buyers have to take a leap of faith, but being able to get into their property for $1 million, say, which the stamp duty on $1 million would be $40,490, being able to forego that cost and use that $40,490 as part of the deposit to get into the property market is going to be very appealing to a lot of people.
Oh, absolutely. Certainly for us, the hardest part of getting into a property was saving that deposit, and I think a lot of people don't realise that stamp duty is taken out of that chunk when you get your loan approval and you go ahead and purchase.
Yeah.
I think it's just assumed that it becomes, an extra part of the loan. So certainly beneficial to have that back in their hands.
So the Liberals' policy is for properties up to $1.5 million, which is pretty good in the sense that it'll be highly practical and applicable in the Sydney market. And I highlight that point, Ciaran, because it's a little bit more debatable what the alternate proposal from Labor is if they were to win government and introduce their policy.
So what is the alternate policy from Labor in the event that Chris Minns does take government in later this year in March or April?
March, I think it is. They will waive stamp duty for first home buyers without an annual property tax up to $800,000 and offer further concessions on stamp duty, or some concessions on stamp duty, between $800,000 and $1 million. So that will play very well in the suburbs and the regions where properties are slightly cheaper or lower priced, if you like. But as you come into the inner city, more toward the beaches, there's not too many sub $1 million apartments. Matt Keane, the Liberal Treasurer, zeroed in on this point, saying the majority of first home buyers in Sydney, which is clearly Australia's biggest city, won't benefit from the scheme, whereas Labor is countering by saying that the Liberal Party don't have a scheme, they have a scam where you'll end up paying more tax. And you may, over the long term, pay more tax, but if it otherwise gets you into the property earlier, is it really a scheme or a scam? They're the decisions facing first home buyers at the moment.
I have to wonder too, Peter, with Labor's proposal to abolish stamp duty, with no annual property tax on properties, as you say, within those metrics for first home buyers, given the amount of revenue that stamp duty generates for the New South Wales government, has there been any discussion around how to address that shortfall in the event that people do take up on this?
Well, they offer pretty generous stamp duty discounts for first home buyers at the moment, but the way property prices have gone in the last 10 years, those incentives can't really be picked up by first home buyers at the moment. So bracket creep of property prices and the way the tax system works means that it's not highly applicable at the moment. So we're not really collecting that at the moment anyway from them. So they're just recalibrating to make it a 2023 version of the 2010 policy, if that makes sense.
No, of course it does. I just want to step back very briefly to the policy that exists right now. We can talk all about what may come, but with the Liberal Party policy, you've mentioned obviously the fixed rate and the percentage paid per year. Is there a difference for first home? I assume it's only for owner-occupiers, or is there an annual property tax element for those who might be looking to invest as well?
If you take this up, I believe that you will need to use this property as your primary place of residence for a minimum period of time, 6 or 12 months. I'd imagine it'd be at least 6, possibly 12. So yes, you couldn't be an investor saying now's the time to rush out and buy my first property and make it an investment. That's not the purpose of this scheme. It is to increase home ownership and give first home buyers a much needed helping hand into the property market. And you can see that the numbers of first home buyers that feel locked out of the property market is clearly at a serious level for both sides of government to make it a key policy coming into an election. So politics is all about numbers, and the numbers are clearly telling both parties that there's a pressure point here, and they're both responding to it. And look, they've both put pretty good policies forward, depending on what your plan and view is of property ownership, depends on which is the better option for you. But at least both parties have put something worthwhile forward.
No, exactly. And it is, as you say, it's rare to see any kind of bipartisan discussion around topics in Australian politics in recent memory anyway.
It's great to see a battle of ideas and policies rather than people making it all a personality contest. This is, as I say, I'm split down the middle as to which is the best option, but I say, well, all power to both sides for putting something to the people and saying, you decide what suits you better.
Oh, look, it's refreshing for sure. I wonder, Peter, early when the policy was drafted and I think it was Perrottet was treasurer at the time, and he put forward some discussion and a review period for this. One of the concerns that was raised back then was if a first home buyer does purchase a property and they opt for the annual property tax, that property is then forever locked onto the annual property tax. Now that we have implementation, has that remained the same, or has there been any changes to that structure?
My understanding is that if the individual opts to pay an annual property tax, that is the path they will take in the future. So Dominic Perrottet clearly has a stepping stone path here toward pushing this across the market, but I think it was too revolutionary in the sense that it would decimate, in theory, it would decimate revenues immediately for the back end, and every government needs, revenue to fund everything that it's doing. So he wasn't able to implement it across the market in one go. And if he loses government in March, won't go any further than this. It'll be dead in the water. Essentially, it'll have lasted 2 months because it came into being on January 15, the state elections in late March. So it'll be a policy that lasted for all of 2.5 months.
We might be in a scenario where we've just got a handful of first home buyers locked into a property tax, and they'll be the only ones in New South Wales for the foreseeable future.
So Chris Minns has said that if you purchase a property after the state election as a first home buyer, but before this is introduced through Parliament, he will make the stamp duty refund retrospective. So he's really giving people an incentive to vote for him on the Saturday, and if he wins government, go and buy out
Purchase
that property
the
from the Monday morning.
Yeah, absolutely. In terms of the impact this is having, obviously we've had a few Saturday open homes now in 2023. Have you seen much change, I guess, in the types of buyers coming to open homes? Are we seeing more first home buyers turn up?
Without a doubt. Without a doubt. And when I say that the policy formally kicked off on January 15, the Liberals also had a policy where they announced it in December and said, if you buy a property between the day in December when they announced it and January 15 when it was implemented, you would pay the full stamp duty and get a refund. So from about that point on, Ciaran, we begun to see first home buyer numbers increasing at inspections, because we've got to remember this coincides with first home buyers being asked to pay rents 20, 30, even 40% above what they're currently paying. So when a tenant's saying, hang on, my rent's just jumped by 30%, and the major obstacle to buying my first home, being stamp duty, has just been removed, I'm now going to go from being a tenant to a buyer. So yeah, we have seen numbers go up. But however, when Chris Minns came out in the new year and said we're going to waive stamp duty entirely with no annual property tax below $800,000, we quickly saw first home buyers in that end of the market go to the sidelines and say we're going to wait and see who wins in March.
Yeah, it's really interesting, isn't it? I think, as you say, everyone's always waiting for that great deal to change their life. I wonder, it's been suggested that these policy changes, irrespective of which one, will actually have, as we've talked about, those unintended consequences of making this a much harder market for first home buyers to come into. And one of the suggestions being, of course, that if we've got these schemes in place and first home buyers don't have to worry so much about saving their deposit, that sellers will actually offset and increase their prices to capitalise. Do you think that's a likely reality? And are we possibly going to see a scenario where, in fact, it will be harder for first home buyers to purchase?
Look, it is a reality that properties that fit under this category may increase in price. There is a clear history between first home buyer benefits flowing straight to being vendor benefits. So John Howard, in my time in real estate, was the first to introduce cash incentives for first home buyers, and the money that the Howard government were feeding or granting towards first home buyers, that benefit flowed straight to vendors in terms of higher sale prices. During the GFC, the Rudd government intelligently targeted first home buyers and encouraged them onto the property market with more handouts. And that was under $500,000, so that was capped in terms of purchase price. And what it did is it created a price bubble. Straight after Wall Street nearly collapsed, we suddenly had a price bubble and a boom in properties below $500,000, where it acted as a mass stimulant for first home buyers that at that point in time had been locked out of the market. So yes, it will flow straight through to vendors, this benefit. Governments are probably in a net position are happy with that, with the economic activity that it creates. But first home buyers need to be conscious that they don't want to take a benefit from the government in the left hand and then give it straight to the vendor with the right hand, and that you need to make sure you're not paying any sort of premium just because you're getting one of these two handouts, if you like.
Look, again, it comes back to what we've touched on so many times on the podcast, which is irrespective of what you are doing in property, research is so critical. And, if you're going into this blind saying, well, now I've got all this extra $40,000 or $50,000 or $60,000 in my pocket for my deposit, that you're not just willingly giving that away to someone else as a cash benefit.
That's right. Look, we are in a market that is falling. That's statistically what we're being told every month. But that's not to say pockets of the market cannot rise. And as I just said, in 2008, the world was actually financially essentially melting down, but first home buyers in Australia, the first home buyer market, had never been stronger because of what this cash incentive, amongst other benefits of the Rudd government at that time. So you wouldn't have thought you'd have seen a boom amongst first home buyers in the biggest downturn that we'd seen in decades, but that's what happened.
Look, just before we wrap up today, Peter, I wonder, given, as you say, you're a little bit split on the two major policies that are out there at the moment, do you think there's anything that government has sort of, egregiously overlooked in this space in terms of things that they could effectively do, short of, perhaps supply side changes or development easing, that kind of thing? Is there anything in a policy perspective they may have overlooked for first home buyers that would encourage them into the market, but also ensure that they're not being taken for a ride?
I think any government intervention is fraught and always ends up with unintended consequence. I think not the government, but the RBA failed everybody in letting asset prices, therefore property prices, run to such crazy highs during COVID and distorting the market.
Absolutely. Look, as always, Peter, really, really good wrap up. It's certainly an interesting time in property. We've got such a volatile market, but also in a period where, as we say, the government is actively invested in trying to make some change, good or bad, whatever it may, come out in the wash. But at least there is active engagement from both sides to try and solve what is a pretty massive problem.
When governments start tinkering with markets, keep your eye on it if you're a player.
Absolutely. Look, Peter, as always, thank you for joining me, and I look forward to seeing you in the studio next week.
Yeah, thanks, Ciaran.
Thanks for joining us on the Current Market Insights podcast, brought to you by Harris Partners Real Estate, the podcast providing real estate insights you won't find anywhere else.